Everyone, and I mean everyone, is looking at Tesla right now, and they should be. The stock just hit an all-time high of $490. The Austin Robotaxi fleet has officially dropped the safety drivers, and the FOMO is absolutely out of control. But while the entire retail market is chasing the Tesla breakout, the institutional smart money is quietly positioning itself into something else entirely. Nvidia just made a move that 90% of investors missed. They didn't launch a new chip, they didn't announce a stock split, they launched Nemotron 3, a software pivot that changes their entire business model from selling hardware once to selling intelligence forever. In this video, I'm going to show you why Tesla's $490 price tag is justified but risky, and why Nvidia's quiet software update might actually be the biggest profit opportunity of 2026. If you hold either of these stocks or you're terrified of the AI bubble crash rumors, you need to watch this chart I'm about to show you. Let's dive in. First, let's address the elephant in the room, Tesla at $490. Why is this happening? It's not just hype. Yesterday, Elon Musk confirmed that the Austin test fleet is running completely empty. No safety driver, no monitoring human in the front seat. This is the 0 to 1 moment we've been waiting for since 2016. Most YouTubers are telling you to buy because robotaxis are cool. That is a losing thesis. Here is the financial reason why this matters. When you remove the human driver, you aren't just lowering costs, you are fundamentally changing the liability structure of the company. Tesla is no longer just selling cars, they are now officially a transportation utility. Look at this. Uber's cost per mile is stuck around $2.50 because they have to pay a human. Tesla's internal cost just dropped to roughly 30 cents. The margin here isn't 20% like a car company, it's 80% like a software company. Wall Street is finally repricing Tesla not as a Ford or Toyota, but as a physical version of Google. That is why we're seeing $490. But, and this is a big but, the RSI is overheated. We are sitting at an RSI of 82. Historically, every time Tesla hits an RSI this high, we see a 10 to 15% pullback within 72 hours. So if you're buying right now at the top, you are playing with fire. But if you hold, you're sitting on a gold mine. However, the real asymmetric bet isn't the loud one, it's the quiet one. While your Twitter feed was exploding with Tesla memes, Nvidia quietly released Nemotron 3 and signed a massive deal with SkedMD. Why does nobody care? Because it's boring software stuff, right? Wrong. The bear case for Nvidia has always been, eventually everyone will have enough chips. That's the hardware peak theory. But Nemotron 3 is an agentic AI model. It's designed to run on top of the hardware to automate complex enterprise workflows. This isn't a chip you buy once. This is a subscription license you pay for every single month. Think about Apple. Apple exploded when they stopped just selling iPhones and started selling services, iCloud, App Store, Apple Music. That stabilizes revenue. Nvidia is doing that right now. This SkedMD deal proves that enterprises are locking in Nvidia's ecosystem. They aren't just buying the shovel anymore, they're paying Nvidia a tax to dig the hole. The stock is consolidating at $175. This is what we call a coiled spring. The market is pricing Nvidia as a hardware company that is about to slow down. But if you factor in the high-margin software revenue coming in 2026 from Nemotron 3, this stock is trading at a discount. Now, I know what you're thinking, but what about the 2026 crash? What about the inflation data? We saw the search trends. Stock market crash 2026 is trending. People are scared. And yes, oil is down to $55, which signals a slowing economy. But here is the secret that wealthy investors know. In a slowing economy, companies fire people. When companies fire people, they must invest in automation to keep running. A recession doesn't kill AI. A recession accelerates AI. If labor gets expensive or scarce, companies will buy more Tesla robotaxis and more Nvidia agentic software to replace human costs. So, betting on Tesla and Nvidia right now isn't just a growth play, it is your hedge against the stagflation that everyone is worried about next year. So, what is the trade? Here is my exact game plan for the next 48 hours. For Tesla, if you're already in, hold. Do not sell your winners. Let the compounding happen. If you're trying to enter, wait. Look for a retest of the $460 level. If it bounces there, that's your entry. Do not FOMO in at $490. For Nvidia, this is the aggressive buy. I'm accumulating shares in the $170 to $176 range. The Nemotron news hasn't been priced in by Wall Street analysts yet. When they update their price targets next month, we could see a run to $200. The market is changing fast. The easy money of 2024 is gone. 2026 is going to be about picking the companies that control the infrastructure, not just the hype. I'm currently researching a third stock, a small-cap energy company that is silently powering these AI data centers and is trading under $20. I'm releasing that breakdown in my next video. You do not want to miss that. Hit that subscribe button, turn on notifications, and I'll see you on the next one.